What's up guys, Bill here. In this video I'm going to revisit Tradytics tool MarketNet Flow, kind of talk about how I'm using it these days and the key things to look for on this tool, okay? First thing is a disclaimer about this tool. There are a lot of things that need to kind of be happening at the same time for this tool to be super reliable, at least in the way I use it, okay? So if you're somebody who's going to be staring at this minute by minute, looking for any little hint that something is coming and entering trades on that, you're going to have a bad time, all right? There's three major things you want to look for on MarketNet Flow. This is the flow from Friday, okay? The first thing you want to see is what I call divergence, which means either calls or puts are going up or down. This green line is your calls, your net calls. Okay, let's talk about what is MarketNet Flow for people that don't know. MarketNet Flow is a tool that captures all of the flow data, every stock market-wide, and then dilutes it down to this graph showing you if people are buying more calls or puts, all right? It's filtering out ETFs because there's a lot of hedging that goes on in ETFs, and that flow is useless for trying to take day trades on. And this tool is specifically for like day trades and scalps, okay? Because it's 1 day's flow data. Now, this green line is your net calls. That means bought calls minus sold calls. Sold calls are bearish, okay? Same thing with puts. Your red line, it's all the bought puts minus the sold puts. Sold puts are bullish, okay? Now, when you see this tool come up on your page, it's normally going to look like this. The white line is SPY's price. MarketNet Flow is best used with SPY. It has a great correlation. It's measuring all the stocks in the market, but it has a great correlation with SPY. And you can see here, calls are going up, prices going up. But it makes the chart really messy. So I don't need to see SPY's price. I'm going to be looking at the chart on SPY on Webull. And I don't really need this algo flow. It's just a color in the background telling you what you can see with these lines. All I'm looking at is the red and green lines. Now, back to what I said about divergence. I want to see calls going up, puts going down, or vice versa, and a big gap starting, right? That's divergence. One is going up, one is going down. What you don't want to see is this, which we had for the first, 2 hours of the day, what I call spaghetti flow, because it looks like strands of spaghetti all tangled up on a plate. This is not going to help you. This is usually going to mean the price is chopping around and not doing anything reliable and sustained. And that's what we want to use this tool for. We want to use this tool as a confidence and conviction booster that when everything's hitting, you say to yourself, okay, maybe I'll size up a little more and hold a little longer. Maybe I was going to be cool with a $1 move. Maybe I'm cool with $2, $3 moves. When this thing is hitting, there's days that SPY just keeps going and going, and it can be to the upside or the downside. Those days where it just rides the EMAs all day and makes a $6, $8 move. It flags, it breaks out again. It flags, it breaks out again, right? Those days where a lot of times you start to doubt that it's going to keep going because you've sat in the chop for the 2 weeks previous before this big breakout happened. And so you sell too early, right? This tool will help you not do that. Okay. But this doesn't happen all the time. Just think about the types of days when SPY has those days. They don't happen all the time, right? But that's the great thing about this tool if you know how to use it. So how do we use it? The first thing we look for is major divergences. I want to see this happening for at least 30 minutes, sustained, right? If you have a micro mindset and you stare at these lines every minute, minute by minute, you might have looked at the open and look at puts are going up, calls are going down, and tried to slap puts, but calls just kept going up. I look for at least 30 minutes. I want to see this reliably do this. Calls keep going up, puts keep going down. When does the divergence start? Around 8:12 my time Pacific, and it just keeps going. So I'm going to look, what's it doing at 11:40, 8:40 my time? It's still, calls are still going up, puts are still going down. So at that point, I'm interested. Now, there's two other things you want to see once the divergence is hitting. What two other things are we looking at? The first one, or I guess you could say the second one, is time frame continuity, TFC. What does that mean? That means that all your contract expirations, whether it's 7 days or less to expiration, or 7 to 15, or 15 to 30, or everything above 30, no filtering, which we're on right now. These all agree. That means that people who are playing zero DTEs, they're heavier in calls than puts. All these different strikes are in agreement with your unfiltered data. So right now we're looking at every type of contract, whether it's a zero DTE or a leap, it doesn't matter. Okay. We want that to light up the same color as whatever flow is winning. Lastly, we want to see convergence. Convergence means that SPY's price is in agreement with the flow. So we flip back SPY's price, calls going up, puts going down, SPY going up. Okay. We want to see all those things line up. That doesn't happen a lot. Okay. Once that's starting to happen and I'm seeing divergence for about 30 minutes on calls and puts, then it's time to start thinking about an entry. And then this is where you lean on your TA and your charts. Let's look at, after about 30 minutes, it was like 11:40, 8:40 my time. Let's look at SPY. Where's SPY? Okay, here's SPY, 8:40. What do we notice here? We're in a bit of an uptrend, right? And this little wick is weird, but what else do we notice? For the last hour, we've been grinding up the EMAs. This wick is from Jay Powell. He had a speech prepared. It was released right here at 8 o'clock Pacific time, and you got some crazy volatility, right? But we're back above the EMAs, and it's right around this time that you've been staring at market net flow. You see this big divergence. So what do? You don't just slap calls here, right? We just made a high a day, but we're noticing respect on the EMAs, okay? What I would say is you start to think about an entry, but let's get on a pullback. Just because market net flow is hitting on all cylinders, all three things are aligned, it's obvious that people are buying a ton of calls. You got to still be patient with your entry. I love pullbacks. You always try to look for a pullback if you can. So let's see. What do we get? We get a pullback right to the EMAs, getting in right around here. Look at just low stress. And you guys know I preach the EMAs on trend days. Well, this is a trending move, right? And it's an easy win all the way up to almost 460. Now, SPY didn't have a ton of range this day. It's not one of the days where, there's days where this move is $6. It looks similar, but it's way more range, right? But I mean, just look how easy that was. Smooth with the calls, and any little dip, you don't have to really worry about as much because you're seeing that people just still buying. And what are the puts doing? There's little pops here and there in them, but it's mostly flat. And just like it's easy to get faked out on a trade if you're staring at 1 minute candles and every little wick is making you scared and stuff, you pull back out to the 15 minute, to the hourly, and it's easier to stay in, right? Your risk is more defined and you're not sweating every little thing. You have to use this tool the same way. You can't look at every little squiggle on the line and start to freak, or start to make it think like, oh, I should slap puts because they just, like puts popped right here. I'm going to slap puts. No. Okay. Lastly, when you see these big vertical straight lines, like see how for the most part, it's a squiggly line. It's trending up, but it's squiggly. They're moving around. If you see a big move like this in a straight bar, that is to be ignored. Okay. So this was not some big influx of important put flow. This is most likely a large, super deep in the money hedge that's just not getting filtered out. You'll see them a lot on ex-dividend days for stocks and things like that. It's annoying. It makes the chart a little harder to read, but you basically just pretend this line's not there and just keep watching the flow like this. Okay. That's really it, guys. It's a weird tool, but it's super useful if you know how to use it. And those are the three things. Let's just review. You're looking for divergence in the calls and puts, which we can see here. That is not it, right? You see that? It's best to just not trade or go find something else. Sometimes SPY has limited range and it's hard to trade, but there's other names out there, growth names, small caps, whatever the case may be, that's going to provide you better moves. Okay. You see this? Just leave SPY alone. All right. We also want time frame continuity, TFC. And we also want convergence, price agreeing with the flow. Those are the three main things. You see that? You see about 30 minutes of divergence on the flow lines. You start to look at your chart. Where can I get in? What's going on with SPY right now? What's a great entry for me? You don't just slap. All right. Especially if you're trading like 0 DTEs, you eat a 50-cent pullback on those and you're down 40%. You got to be careful still with your entry. But once you're in, you can feel confident as you continue to see this divergence and the TFC and everything lining up that you can keep holding. And then when do you get out? Scale, obviously. Use your targets. You can use convergence when it flips gray. That means that SPY's prices started to kind of disagree, right? See, we're flipping gray. We're starting to pull back. When I'm looking at a trending move, once we lose these EMAs, then I'm kind of, I lose interest, right? I'm just going to be in runners after this whole move and we're getting close to 460. I'm just going to be in runners up here and trying to hold them. Usually I'll set a break even stop and just not sweat it. But if I was playing the chart, we start to lose these EMAs down here, I would cut. And that's about where you start to see the convergence go gray. Okay, guys? Hopefully that helps. If you have any questions about market net flow, I've been using this tool for a long time. Just leave a comment or find me on Twitter. Ask me a question. I'll help you out.